To our market report before we get into the meat of the meeting. We do this every 2 weeks. We take up Calgary Real Estate Board stats and we go over some of the figures that we think everybody should focus on. If you look at the numbers that I've highlighted, total sales and the average price, both for this month up to today and annual year to date. If you look down at the annual year to date numbers, that's pretty much a snapshot of the way the whole city is going to end up this year, 2023. Total sales were down about 8%. That is because of the interest rate rises throughout the year. But the average price, this is an anomaly across Canada. Some cities are doing better than others. The bigger cities, Vancouver and Toronto, are seeing very, very huge price decreases. But Calgary's average price is going to settle out around 4% increase, which is higher than our 75-year average, which is 3.5%. We track these stats, weekly and monthly and yearly, and to have a 4% increase in a year where you see our supply so tight and interest rates affecting buyers so much, we think it's a great number.
Yeah. I mean, at the end of the day, 4.27%. What's been challenging this year, though, Tim, is the number of listings that have come on the market. That's what's really hurt us. And when we say hurt us, normally in a normal market, we would take our clients out, show them 3 to 4 properties, and basically they would choose one. This market, we actually have to wait for properties to come on the market, then rush out and go see it, and then hopefully there's not too many other offers. And lately, Tim, there's been
too many other offers.
So when that happens, we have to actually cut our clients off sometimes and say, you know what, we can't go past this number just because the numbers don't work once we go past it. So you have to remember.
So it's reflected right here in this number, active listings. I don't know if the mouse is moving around. It is. We're under 3,000 active listings right now. Now, in a healthy, balanced market in Calgary, we are at close to 6,000 active listings. So we're almost half of where we should be to have a balanced market. So you can see that it is still a buyer's market right now. There's not enough properties for the number of buyers that are out there. Even though the interest rates are high, we still have too many buyers out there chasing too few properties.
Yeah, so just to speak to those active listings, that's not showing the actual pending listings in there. So when you take away the pending listings are the properties that are under contract. And if you take away the pending, it's roughly 600 of those.
Hey there, come on in.
It brings it down to 2,400 listings. And out of that 2,400 listings, there's 900 condos. So we have to stress this. So out of this 2,900 or 3,000 that Tim's showing, when you take away the pending listings, there's 2,400. And then when you take away the condos, 900 condos, we're left with 1,500 houses. And out of those houses, there's 230 attached, so semi-detached homes. So when you look at that, there's no choice. You can't go out there. And that's why we were just saying at the beginning of the session, why it's such a good time to sell a property right now is because the buyers are frustrated. We have a lot of buyers, but we don't have any inventory for them. And some of them are in different price ranges. Some of them are looking for particular suited properties. Some of them, Tim, are looking for that dream home. If you're looking for your dream home right now, forget it, because it's not going to happen. I mean,
well, unless you're over 800,000. You're
Yeah.
up in the very, very high reaches of the price range. Those properties are taking a longer time to sell because of the interest rates. If you're getting a mortgage on one of those places, your mortgage payment's going to be quite high. We see people paying cash for those types of houses because then they're not stuck with these massive mortgage payments.
Yeah, and so you have to remember also with the average price just being at 4%, the condo market, so anything really under $500,000, that price range has gone up roughly 10 to 12%. So you have to remember inside those numbers, there's different sectors of the market that are going up really, really good and will continue into next year, okay? Because one thing with the condo market right now in Calgary is that they're building rental buildings. They're not building apartment buildings for sale, for condos for sale. So you have to remember that. So that inventory, it's not going to come back anytime soon. And we were just talking about this to people in the room just before the session started, that we feel that, first off, it's costly to build right now with these interest rates. So we know developers here in Calgary that are just holding off because of the financial aspect of getting properties off the ground, first of all, and then second of all, getting labor to build, and then third, cost of building materials has gone up as well. So those factors, what that does is it drives the properties that are on the market right now, it drives those values up even more, okay? And real estate goes up because of one reason, and it's supply and demand. We have the population coming here, so we all know that. They're all moving from Ontario, they're moving from BC. Why are they moving? Because the cost of living here, Tim, is still cheaper than living out there. So you have that happening. The rumor is 75 people roughly per day moving here. There's not enough rental properties for them. And there's not enough properties for them to buy. So you've got a double-edged sword there where it's just going to continue forcing prices upwards.
Yeah.
Okay.
And the last number at the bottom there we want to focus on is the days on market. You can see in November 2021 it was 40, and then it's down to 30 days in 2022, down to 26 in 2023. That reflects the supply and demand issue. So the properties out there are not lasting as long on the market, and they're getting scooped up faster and faster. The better quality properties, you're looking at days on market less than 2 weeks. That's the period that it takes to do the conditional, the due diligence period.
Mm-hmm.
So, you know, this includes all property types, all property prices. And you can see that it's quite a bit lower than years before. So again, it's a reflection of our supply and demand issue. And we anticipate this to stay in place until the market starts to shift early spring. We're going to have to see some increased builds. We're going to have to see some migration actually settle down a little bit. And we're going to have to see interest rates start to come down as well. So can we see the future, all those things happening? No. So we figure we're going to continue on this track for the foreseeable future.
Yeah, and people might be sitting there saying, well, Calgary's gone up this year. Where is it going to end up? We've been saying for the longest time, the average price, Tim, should be around 650,000. How do we get to that number? We just look at the bigger cities like Vancouver and Toronto, and they're at 1.3 right now, 1.2, 1.3. Yeah. Calgary, we went to a CMHC meeting. We said this last session, but we're still blown away from it. Calgary has never been so far apart from the value of what Toronto real estate is to what Calgary is. It's never been, the history of Calgary real estate has never been that far apart. So where do we see it going? We feel that it will catch up a little bit, and it may take some time, but we feel the Calgary real estate market has still got a long way to go, and $650,000 is still affordable. Like it's not out to lunch, and as you can see, the average price is here at $540.
Yeah, and when we hear stories about young people saying, "Oh, we'll never have to buy a house. We'll never be able to buy a house. It'll take 25 years to save up a down payment." All we have to do is look at those larger centers, Vancouver and Toronto, and even Montreal. What we're seeing is multi-generational families moving into properties. So we've even seen some of the new builds up in the Northeast where they're building single family homes, but they have 9 or 10 bedrooms in them. They have 5 or 6 bathrooms in them. So a multi-generational family can move in there and live there comfortably. And it's not just a 3-bedroom, 2-bath bungalow that we're used to seeing all over the city. We're actually building for the type of customer that is coming to the city. And it's in demand. Those properties are selling. We're seeing those families move into them. And we just have to work with that. And that's the way of the future in the city.
Yeah. If anyone had any questions on that, just put it in the chat or yell out, but we're in a good position. We normally have Danielle, our mortgage broker, come on in. Sometimes she's in person, sometimes she's online. Danielle's been working with us since 2006. So she obviously knows what she's doing. We always say she doesn't just get you a mortgage, she gets you a mortgage plan. If you guys are sitting out there thinking you want to get into real estate investing or owning your first property, it's worth getting a second opinion off Danielle 100%. She's at the Flames game tonight, lucky girl. So she won't be on. But one thing about Danielle, and one thing she's doing a lot for our clients right now, is doing refinances. So some people are sitting on a lot of equity in their properties. And Tim, we've come across a lot of clients that actually refinance that money out and then use those funds to buy their second property, either to upgrade their home or to buy an investment property. And we have to tell you that that equity in your home could be a great way, even in these times, Tim, to use to actually help you get through the expensive time we're going through right now with inflation, higher interest rates. That mortgage could help people out there.
Yeah, that's actually one of the ways of finding some more cash to get your next rental property, which is going to be part of our presentation. But back to Danielle, like Azad said, she develops a real estate plan. If you want to buy one rental property, if you want two, if you want three, if you want four, she will actually sit you down, look at your finances and look where you are right now and what you have to do with your finances to get you there in the time frame that you want. Obviously, you can't do what we did in the early 2000s, go out and assume 5 properties in the same month, but she can set you up so that you're getting the proper mortgage, putting it on the proper property so that you can set you up to buy your second one in a period of time, whether it's 6 months or a year or 2 years, whatever works for your finances. And she's very good at that, and she does it an individual plan for each one of our clients.
Yeah, so take Danielle's number down, reach out to her, send her an email.